Hello friends, I'm Rocky Outcrop and let's take a look at the Bitcoin charts together. So this is actually being filmed after I filmed the other episodes today because I just thought, hey, why not? I'll do it the other way around. Maybe it'll make the whole process a bit quicker for me, I thought, and I'm probably wrong on that front. Anyway, thanks so much for joining me. Really do appreciate it. I'm just checking in here with the CME charts and seeing have we filled in that gap. As you can see, it's visible on the 1 hour time frame coming up, like, coming in from where we have this ray at showing us that we're just shy of filling that in quite yet. The highest today being in there at 10,565. So that remains on the chart for now. But if we go up the time frames, towards the 2 hour, then you can see that, well, that's the same deal on the 2 hour. But on the 3 hour time frame, then we filled in that gap, and on the 4 hour time frame, well, the gap didn't exist at all in the first place. On the 24 hour time frame, of course, it's not there either, and we have indeed then come back down. Then we have come up towards these targets, and we've got this gap below us in terms of a target currently. We've got a high over here. If I go over to the spot prices, where you can see there's an inflection just here, and where we've come to so far, we've not actually managed to take this previous high out, just over here on the 4th of September. And if we were to do that, I don't know why these are back on the charts. I removed them yesterday, but they're back. Sometimes TradingView doesn't save, I guess. You can see there that we've come up and we've put in many highs compared to our previous highs on the RSIs, while we've not actually managed to close up higher really at all yet. So what we could end up ultimately having here is a degree of hidden bearish divergence. As we poke our heads outside of the channel, we'll have to see if on the 24 hour time frame, if we see the prices dropping back down into those lower 10,000 areas, then maybe all we're doing is kind of burning off any sort of positive enthusiasm towards the top side before continuing along the way towards the lower side. If you look over here at the CME charts, then you can see that I had actually got a sort of conceptual, go to the 4 hour time frame, descending, broadening wedge on the go. As you can see, in one sense, perhaps we've broken out of that, but actually, if we just kind of consider this to be still within it, that's also a possibility. But really, this was just a speculative effort, and instead, taking away both of these things, what do we have really perhaps on this one? Well, we have the potential for this to be like a head and shoulders, which is with this being a shoulder, this being a head, and this being a shoulder here, with a neckline down here having come up, and it's just kind of failed in terms of moving past that. We also have the potential as well for various other sorts of patterns on the go, such as a small term time frame Gartley type pattern as well. But I'm not going to actually do this exact, but just something along these sorts of lines. And have we got that? Is this actually a bearish bat that we have on the go at the minute? Well, there's the potential for that. Not drawn in exactly, not drawn very well. I'm going to remove that from the charts. And and where exactly are we? Well, really, we just come in here and tested in around the area of the gap, and potentially, if we were to go for a head and shoulders that had a full measured move on the back of any of these sorts of time frames, going over here towards the spot prices, so it's a wee bit clearer and easier to see. If this was a shoulder, a head, and a shoulder, and then we've come up towards the neckline area and broken along past it just now, then it would take us all the way potentially as high as 10,800 in terms of measured move, back into and around this sort of inflection zone over here, and we'd be asking questions then at that point yet again if we have going to be pushing past this and we've burnt off all of the necessary bearishness from this, or if indeed that will come back down again and fill in that CME gap. Now, if we do that, we're doing that with a degree of bearish divergence on the go, so that's something to watch out for. Hidden bearish divergence, So that would be add potentially to the momentum from this thing. Maybe we see the full thing getting filled out. Well, we tried 3 times in the past or 4 times to actually go into that zone and didn't succeed at filling the gap out. So that's what I'm looking to today for today's trade-in, really, essentially. What we've done as well is we've come up towards the warning line of our pitchfork over there on the BitMEX prices. Just zoom this back out a bit so you can see we have this pitchfork here. We've extended it down the way with a parallel channel, as you can do. I've explained all that numerous times. Found support in around about these areas and then moved back towards the top side. And currently we found resistance in it around about the 10,500 area, where we have currently, actually that parallel channel that's on the background there is very much redundant. Don't know why I've got that. Sorry, must have been a mistake. And you know, that's what we're looking at there. 10,502 is our sort of high, or 10,488. Yes, 10,488 is our high for today, and so far distinctly being resisted here at that zone of the pitchfork. Now, can we make it back into it? In which case, targets towards the top side become that 10,800 area, the fulfillment of a measured move of a head and shoulders here. If this is going to be a shoulder and a head and a shoulder in this zone as a sort of bottoming formation, or a medium sort of term reversal pattern after the trend towards the downside, sure, it could be. Could also be a bearish Gartley that we have on the go here, like I was kind of intimating as well over there, looking, or a bat or something. In terms of harmonic pattern, not going to do all the measurements for that, just kind of saying that there's two sides to this story currently. You can go ahead and do all the sort of calculations for that yourself. Now, movements down below 10,140 would be quite negative for us, and doody. But looking at these lows here, this low came in, there's this low followed by this low, which is how it had a low here on the RSI and then a higher low on the RSI. So you can see quite distinctly here on the 4-hour time frame that there was bullish divergence just here. Then the prices came along and put in an almost equal low, while indeed the RSI didn't go as low again. So that's, you know, that sort of class B bullish divergence that you've got on the go just there. Almost, although not quite, just almost. And so far then the prices have come up here and past our previous highs. But let's look at the top side then, if this is a downward trend area that we've been in until such times as we manage to really successfully push past and into this pitchfork again. We can call this sort of downward trend or sideways, and we've got higher highs coming in on the RSI all along the way, and the Stochastics has come up here and it's almost put in a higher high, but it hasn't quite. The DMI has done that, it's put in this higher highs, and the MACD hasn't actually really. But if this were to be the case, then you'd be looking at potential for hidden bearish divergence in at this point here, you know. But then again, you know, we're right at an inflection point in the market. We could consolidate here for a while and then try up the way, or we could indeed just get rejected from this point here, have a failed head and shoulders pattern, having never really managed to take out properly the neckline. Really, we're just kind of at the neckline just now of this thing. And then you know, and 60% of these patterns do fail, and then we'd be looking back again at this 10,140 region, saying, will we go down and fill in that CME gap down below? So that's kind of the two sides of the coin currently, really, for us on this asset. 10,515. Are we feeling this in quite yet? You know, not quite. Again, just a reminder, it's not quite done yet at 10,585. So maybe, you know, we push on past, and then at that point we'll be able to see a touch more of that of potential divergences. Looking right down to the really small time frames. Whoopsie. Then looking down to the really small time frames, you know, we've just coming back down here. Will we be supported by this or not, or push on past it, kind of adding up to a rejection outside of the pitchfork again, you know, that and down towards these zones, giving you a profit taking target of 10,248 if you're trading this, with a nice solid $200 move towards the downside if you're trading it on the really small turn time frames. That's kind of just for the benefit of people watching this after the video comes out. Looking at this towards the top side, you know, is there divergences or whatever in terms of these small turn time frames? Well, we've had them along the way. This most recent of highs almost burnt off all of that divergence, as you can see here, coming up higher than the previous highs on the RSI. But over here in the Stochastics, you know, that's not necessarily the case. It's just kind of that class B divergence there in this oversold territory, you know, putting in this high at the minute. So that's kind of interesting. I hadn't quite done that before. Would have been an okay type of a concept. Is like, will we get hidden bearish divergence, you know, beforehand, looking at this during this high on the RSI or the Stochastics. This is this one here at 1245, you know, 1245 in around this area at the sort of 10,370. That could have been hidden bearish divergence had we turned around and gone down the way, but we didn't manage to do that, and instead we pushed on up the way and potentially put in class B just regular divergence there in terms of this being an upward trend. Looking at the lows then during this upward trend, did we get any hidden bullish divergence on the go? And we didn't. So apart from over here actually on the MACD, where we did get hidden bullish divergence, as you can see, there's been sort of hidden bullish divergence along the way with this MACD, giving you that broadening structure. So whenever there's regular divergence on the MACD, then you get sort of wedges, and whenever there's hidden divergence, you get broadening wedges. Now, broadening wedge is generally a continuation pattern as opposed to a reversal one, so your continuation of the previous trend before, which was overall a downward trend, looking at this one. So this is all obviously on the 15-minute time frame. It's very, very small fry stuff, but I'm just changing it up today. Fancy doing something a little bit different to the usual technical analysis, which is all mostly based around the 24-hour time frame. So you can see that working there anyway for us. I was sticking a couple of trend lines going up the way, and from, say, this area up. It's a bit messy. And then from this area, it's a little bit broadening. I'm kind of cut through some bodies there for that. I'm not so pleased with it. Let me just take it from the end here instead and say you've got this sort of broadening structure. But it's all obviously quite slack because we're talking about the 15-minute time frame, and nothing really is perfect down here on these sort of irrational time frames. Go over to the 1 hour time frame, maybe a bit easier to sort of talk about this as a concept, coming from these areas instead, like I was trying to get at before. Of course, the divergences are visible on the lower time frames, but this sort of the structure of this thing is more visible on this, just as a point just to make here, coming in here at a resistance area. So that could offer you up your sort of your turnaround if we get rejected from doing the head and shoulders at the neckline, which is kind of maybe why it lends towards that statistical likelihood of being a 60% type rejection from that area for us. In terms of bigger, broader picture stuff, then, if we did drop towards the downside, 10,140 could lead towards targets, for instance, in terms of just a Fibonacci perspective, of 8,883, 7,867, and 6,575. Of course, that's all very much getting ahead of yourself. Instead, I'd be happy enough just to be trading around about this gap here between both the gaps. Bearing in mind, then, of course, maybe you could say we're close enough in terms of this hourly gap. Hourly gaps aren't so perfect a thing, and in terms of the 3 hour time frame, we filled in the gap. So maybe we filled in this gap that's on the charts from sort of the small fry time frame area. Obviously, it was never existed on the 24-hour at all in the first place, and maybe we'll go back down and then fill in this area down below. So there's that to be considered now if we were to fail at this point. And beforehand, you could have said that there's a descending broadening wedge on the go here on this one. Did I say that already? I think I kind of did. Yeah, so you could have this sort of idea. I already said this already, I think, in this episode, this sort of descending broadening wedge structure continuation again for us as well. What am I saying? This continuation as well. That would be like for sorry, that would obviously imply that you'd have it so that you could maybe break it towards the top side as part of that head and shoulders, continuation. But we don't have continuation because we had this downward drop. Sorry, I just got confused with myself there. This was a downward drop down to this. The prior trend has been down the way. So, that doesn't really work, in terms of the structure of it, because you've only got the 2 touches. If you're to have more than that, then we've kind of already done it. And we've just more or less kind of done this sort of this tightening wedge type idea instead, and we've had the play out from this so far to take us up towards this gap. Didn't quite fill it in the hourly time frame, but that's the pattern there. Makes a lot more sense in terms of touches and the way that you would do these things than that broadening wedge thing that I didn't really like the look of. What else do we have here that's worth looking at really for us? Yeah, hidden bearish divergence, very much so the case here at the minute. Very strongly apparent here in the MACD, hidden bearish divergence. So you've got that. And as well, it's on the RSI between this inflection point just here and where we've come to most recently. So there's that on the RSI. So that hidden bearish divergence there on that front. So that's what we're looking at really in general for this thing here. That's a 13-minute episode. It more or less sums us up. There's a head and shoulders kind of drawn in to kind of give us an idea of things. It's not quite perfect, is in terms of its positioning. I hate the head and shoulders tool. as a thing, and anyway, it always wants to be so exact with it, and of course, life isn't really about being exact. Really about this sort of thing. So anyway, we're in that zone right now, as you can see with that structure there, just kind of testing. If we do break up above, then, there we go. And that's like, that we'll call it 10,500 for the sort of the resistance there to break up above, where we have, this downward sloping neckline of this thing. And a failure of this, of course, then looking down the way would be like $10,000 mark, the 9,000 area. Going back down below this at this point now would, of course, be a super failure of that pattern, in which case, you could be looking towards those downward side targets, having had hidden bearish divergence on the go. Little things to be aware of, though, is that we do currently have a cross happening here with the DM positive, or the positive DI and negative DI crossing here on the DMI, while this is above 20. So this is actually a buy signal for us, coming right in at the neckline of a head and shoulders. So, it makes it easy to manage your risk if you're trading this thing in terms of the options that you've got. You could very much easily take advantage of that should you so desire. So there's an option for you. And what else do we have currently with things to be taken aware of? I think that's probably going to do it for today's episode, really, to be honest with you. And I'll leave it with you until I come back tomorrow. I've got a little sort of, I have had this little chat today throughout the day about how I was going to teach people kind of how to trade by using the small time frames here. But what happened was I opened up a trade there at the point at which you would have said there was hidden bearish divergence on the go, had been rejected at 370 or so, wherever it was here. If we go down to the hourly time frame, but easier to see. Is it? Over there at 370, right? So there, right? No, 9th of September, that was yesterday. I was on the very small time frames, of course, sorry. Where's 370 at? So I opened up a trade here at about 370, thinking maybe, we get rejected from here. From Fibonacci point of view, that was a 618 golden pocket, yada, yada. And then I says, if I was doing this properly, I would manage my risk in this area and stop out at 380 or 390, right? And then I went on and did the other episodes, as you'll see if you look at the episodes today, in which case then the trade just went to pot. Then it went up to 460, and I was saying, oh, well, okay, we could keep doing this episode, but I'll just get out of this and then restart the short here from 468, and, we'll still talk about it as if it's the same sort of chat scenario there. And yeah, sure, it's working and it's all good, but I'm not sure if I can really be bothered with publishing that video or not. I don't know. I'm in two minds about it. It was a good video, I suppose, but yeah, I don't know. I mean, I don't know if I'll bother publishing it or not. And because it overlapped so much with what I was doing. Essentially, I was looking at the small term time frames and saying, imagine that each one of these was a day, right? And looking at the sort of the 1 minute time frame or the 3 minute time frame or whatever, the 1 minute time frame. Then I filmed the other episodes without managing my position properly. And then every time I'd finished an episode, I was going back to it and looking at it going, that's effectively like 2 weeks has gone by without me looking at my position, And then I filmed, so it was Ethereum, then Chainlink, then Tezos, and each time it was like 2 weeks had gone by. I was like, this isn't really working. It's like I've opened up a position and I was saying, this is how you trade, and then not looked at it for over a month. It was like 40 days later. So that doesn't work in terms of an examples. I'd have to film it all over again, and that's why then I ditched the position here at 469. I was like, right, okay, let's do this again. And I was talking about it, and I could be talking about it now. I could be and doing all the chat, and with 10 it's down there at $10, whatever. We've essentially got in here at what? Yeah, we got in here just after we put in this top, came down, came up again, shorted it here. It's come down to this point here, and yes, there's now, like, we're now looking at maybe getting through a Fibonacci retracement thing. If I just stick one on here from, say, these lows, excuse me, if I take it from wick to wick, going from here up to this wick here, then you can see we're right at the 236, coming in here, and we could potentially push on past it. Then I could do the episode, I could do it now, and I could talk about profit taking targets down here at these different areas and why you would be doing it and everything else. But I don't know if I can be bothered now, to be honest with you, because I've talked too much. My throat's sore, and I need to go off and do like my actual trading, instead of like messing around with $5. Seriously, it's like $5. Estimated value of account $50 there. So at 10x, $5. It was just for the fun of it. This is essentially just affiliate monies. Tell you what though, if you want to use my KuCoin or any other affiliate link in order to sort of supplement this account, and then I do it again properly or something, then let me know in the comments or in the Discord section if you want that type of episode. And yeah, I'm just going to skip it for today. So despite the fact I've talked about it in my episodes, I'm just going to skip it, and I'll sort of do the whole teaching you how to trade thing some other time. Yeah, that'll do. That'll do for the Bitcoin episode as well. Thanks so much for tuning in. Really do appreciate it. That's another 20 minutes. And I covered most of the things you need to know, where we come from, where we're going, where we are right now. We're obviously at an inflection point in the market right now. Good chance of it going up, good chance of it going down. Easy enough to manage your risk, right? Really easy to manage everything, based off the back of this episode. So that should make your trading life easier. I hope you take some value away from it, and therefore, decide to share the channel with your friends. YouTube.com/Rocky Outcrop. I'd really appreciate it. A friend of yours is a friend of mine, of course. You can join the Discord, all that good stuff, and I'll catch you in the next episode tomorrow. Maybe I'll do it over the weekend, because tomorrow's Friday, and then I could do one of these in the weekend in my time off. That would make a lot more sense, especially than trying to say, well, I think it was the 3-minute candles that was on. So first off, weeks were going by in terms of these candles going on. Just in terms of me chatting about this alone, in terms of the 3-minute candles. When did I start talking about this? It's like 20 minutes into this. Probably started talking about this a good solid 6 minutes ago. So it's like a couple of days have gone by, and I've just been chatting. So obviously you have to be paying attention to do this type of episode, and I've just not been. And it's so not worth it. That's the decision. So decision made. Nice one. Thanks very much for tuning in. Really do appreciate it. Share with your friends. All that good stuff. I hope I make your trading life a little bit easier. I hope I give you some value to take away, a bit of lessons every so often. As we're testing the 236 there, it would make a good opportunity for an episode, because I would have taken profit there. If I was managing this properly, I would have taken some of my profit here. I've got a couple of orders in, do I not? Do I have orders in here? Yeah, what's this at? 280, 400. Where's the prices of this at? 420. Yeah, so I should probably have taken some of the profit off the table here at the 236, just to say that'll cover my fees, or whatever. And that sort of thing, but I didn't. So whatever. Ding. Excellent. And on that note, I'll catch you next time. 2K subscribers before the end of September. Can we do that? Be a part of that journey. I'd really appreciate it. Catch you next time.